As we know, when a business is running, it needs to spend money, and this is called expenditures. From an accounting point of view, there are two types of expenditures. One is called capital expenditure, and another one is called revenue expenditure. Today we're going to learn these two expenditures and the differences between them, and also the accounting treatments of those two expenditures. First of all, let's start from capital expenditure. The definition of capital expenditure is spending on the purchase, alteration, or improvement of non-current asset. So we need to know what non-current assets are. Otherwise, we don't know how to classify the expenditures, right? So there are some features of a business non-current assets. First, the benefit of the asset is derived from more than 1 year. For example, business fixtures and fittings, office premises, motor vehicles, factory, plant, equipment, and etc. And most of this non-current assets have one-off purchase because we need to keep them in the business and use it for long term. The purpose of purchasing non-current assets is to keep and use them within the business. We're not going to sell it for money, right? We not sell and make profit from it. We keep it and use it for the business daily running. So that's called non-current asset. Like our office buildings, our desk, computers, all these assets that the business is used to run day-to-day using. So that's called non-current asset. Capital expenditure. So now we know what non-current assets are, right? According to the definition of capital expenditure, we can classify the following expenses and adding value or create non-current asset. So the following expenditures are all capital expenditures. Firstly, the price of non-current asset. When we're buying a non-current asset, we need to pay for it. So the price is the non-current asset expenditure, is a capital expenditure. For some big machinery or equipment, they need to be delivered to the factory and need to be installed before it can be used. So these expenses are also recognized as capital expenditure. So the delivery cost and installation cost included in the price of non-current asset, they're all recognized as capital expenditure. And also, if we buy a office building or a factory, the title of the property need to be changed, need to be transferred. So we need a lawyer or a conveyancer to do it. So there are legal costs as well. The legal costs are also capital expenditures. So as all the above discussed, we can tell that the expenditure before the fixed asset reach the condition of use is all called capital expenditure. So it's including the price, the delivery cost, installation cost. If there is legal cost, we need to include the legal cost. And at last, sometimes the business need to update or renovate or extend their non-current assets, which called non-current asset development. This expenditure are also recognized as capital expenditure. So for example, we repaint the office, we change the floor of the office, of the building, of the factory, of the plant. We add new engine to the machine, right? So all this is add value to the non-current asset. So all the expenditures add value or create a non-current asset are recognized as capital expenditure. There is one thing that we need to pay attention, which is the repair cost of the non-current asset. As we know, when we're running a machine, sometimes there will be something wrong with it and we need to repair it. But the repair cost does not recognized as capital expenditure. Why? Because it does not add value to it. Just to fix it, to let it keep running. So the repair cost is not capital expenditure. Then let's have a look of the revenue expenditure. The definition of revenue expenditure is spending on the day-to-day running expenses of the business that are used in the current accounting period. To understand the definition, we need to know the features of revenue expenditures. As we know, when a business is running, there are many current assets need to buy as well. For example, we use the office stationery like paper, ink, pens, all this current asset we call it as current asset because they have the following features. First, the benefit of the asset is used up within 1 year. So we use it very often and it's running out very quickly. So we need to buy it again and again. It's usually recurring expense, also called day-to-day expense. So we buy this kind of assets is not to keep it. We just use it, right? And it's running out very quickly. And the purpose of this kind of assets is to be used, or we have to resell it to make profit, such as inventories. Inventories, we buy it and we sell it and we make profit from it. It's not like the non-current asset, we keep it and use it for long term. It's different, right? So we can understand if it's recurring expense, or we buy it quite often, or we buy it to resell it, these kind of expenses are recognized as revenue expenditure. Besides of expense on current asset, there are many other expenses in the business relating to the non-current asset daily operations, such as the insurance relating to the use of the assets, right? Like we buy a machine or we bought an office building, we might buy insurance for it, but it's not necessary. Before we use it, it's better to buy it. So the insurance expenses is recognized as a revenue expenditure other than capital expenditure, because it does not add value to the office building or to the machine, right? It's just happened year by year. So it's called revenue expenditure. Also, for example, if we buy a big lorry to do the delivery, we might need a professional driver to drive it. So we need to train the staff. The training cost of the staff also recognized as revenue expenditure, because it's happened again and again and does not add value to the non-current asset, right? So it's called revenue expenditure. Also, the maintenance and the repairs cost. When we maintain a machine or repair a machine, it does not add value to it. So it's recognized as revenue expenditure, not capital expenditure. And other running costs. All these kind of expenditures are recognized as revenue expenditure, but not capital expenditure. As above discussion, we now have some concepts about revenue expenditures and capital expenditures. And now let's have a look of some examples of capital expenditure and revenue expenditure. We can see this table. The left column is called capital expenditure, and the right column is revenue expenditures. For example, we buy a premises. It's capital expenditure because we create a new non-current asset. And after we bought the premises, we need to transfer the title. So we need a lawyer or conveyancing to do the conveyancing. So the legal charges for conveyancing is called capital expenditure. And if we buy a new machine, the new machinery is capital expenditure. The spending on the new machinery is capital expenditure. And the installation of it, and the delivery cost, right? So all the additions to the assets, add value to the asset, is all recognized as capital expenditures. And also we buy a motor van. All this a non-current asset, a create non-current asset. And also the extension cost of a new office, a cost of adding air conditioning to the office as well. All this make the office more valuable. So it's add value to the office. It's add value to the non-current asset. They're all called capital expenditures. Here we need to pay attention to two words, because during the exam, sometimes this happened. There were two different words. One is decorate and one is renovate. Decorate is a small expenses. Normally it does not add value to the property, but renovate means to renovate the whole office, like change the floor, repaint the wall, or do some big changes for the office, for the property. So it's add value to the non-current asset. So renovate is recognized as capital expenditure, but redecorate as a revenue expenditure. So that's different things. Although it's all make the profit look better, but it's different, right? So we need to pay attention to these two words to know the differences of them. And the right side, the right column, is revenue expenditures, like the rent of the premises, the legal charges for debt collection. Also, it's a legal expenses, but it's different. It's not add value to the non-current asset. The debt collection means someone owes us money, on the business money. So we need to ask some lawyer to make the money back, to collect the money back. So the legal charge for debt collection is also legal cost, but not recognized as capital expenditure. It's a revenue expenditure because it happened again and again. And the maintenance of asset, like we need to maintain our cars normally yearly or even quarterly, right? The maintenance of the assets need to happen again and again as a day-to-day expense. So we recognize it as a revenue expenditure, and repairs as well. And carriage on purchase and revenue. So for example, if we buy an inventory and we sell goods, we need to use cars to carry it. So the carriage on this kind of expense is revenue expenditure. It's not capital expenditure. Okay, so it's a day-to-day expense. And the redecorate existing offices, we just mentioned before, so we'll not repeat it. And the last one is interest on loan to purchase air conditioning. Like we purchase air conditioning to add value to the office, but if we borrow money to purchase the air conditioning, we need to pay interest to the bank. So the interest on the loan is not add value to the air conditioning. It's a day-to-day expenses. Right, so the interest on the loan to purchase air conditioning is recognized as revenue expenditure. So from these examples, we can tell the differences from capital expenditure and revenue expenditure. There is one sentence to summarize capital expenditure is when we create or add value to non-current asset, this kind of expenditures we recognize as capital expenditures. And other day-to-day business running expenditures we call revenue expenditure. So that's two different expenditures. At last, let's have a look of the accounting treatment of those two expenditures. Normally, capital expenditure are recorded in the financial position statement as a non-current asset because this add value to non-current asset. When we buy a new non-current asset or update a non-current asset, we put it under non-current asset, which is in the financial position under non-current assets. But revenue expenditure is a day-to-day expense to keep the business running, so it's normally recorded in the profit loss statement as an expense to calculate the profit for the year. So this classification of two expenditures are very important for our financial statement. If we make mistakes, there will some impact. So now let's have a look of the impact of errors in classification of expenditures. If we misclassify the capital expenditure as revenue expenditure, what will happen? The day-to-day expenses will be higher than it's actually happened, right? So the profit for the year will be less than the actually happened. So the profit for the year will be understated. And meanwhile, because we misclassified the capital expenditure to revenue expenditure, so the non-current asset value is understated as well. So it's less than it's actually happened. So the statement of financial position value were not included in the value of the non-current asset. So the non-current asset value is understated as well. And vice versa. If we misclassified revenue expenditure as capital expenditure, the profit will be overstated and the non-current asset will be overstated as well. So it's very important to classify the expenditure right when we do a financial statements. We need to classify the expenditures in the right way. So it's very important to know the definition and know how to classify the capital expenditure and the revenue expenditure. So today we learn the definition, features, and examples of capital expenditure and revenue expenditures and the differences between them. And today we also learn the accounting treatment of capital and revenue expenditure and the impact of the wrongly classified capital and revenue expenditure. So it's very important for us to know this because it will make the financial statement right if we classify these two expenditure right. Otherwise, we'll be present a wrong financial statement to the users, which is not good for accounting. Okay, that's for today. Thank you for watching and have a good day.